Hello everyone, Jamie Meloni here, host of the all-new That Business Show 2.0, where business becomes show business. New episodes air weekday mornings at 7 a.m. Eastern Standard Time on thatbusinessnetwork.com and then on demand on YouTube, as well as on iTunes and several other podcasting sites as well, including Google Play and SoundCloud. So a lot of different ways to get the content on demand, and over 1,000 different entrepreneurial interviews going back 3.5 years on the program, all available both in audio and in video. So I'm excited today. We'll be talking with Damion Lupo. He is the CEO of Total Control Financial, about wealth management. And over the last quarter century, Damion has started and owned more than 30 different companies, including an insurance agency, a precious metals firm, a venture capital company, a financial consulting firm, and more than a dozen real estate investment and development companies. And he's also the founder of Yokido, his own martial arts, and holds 3 other black belts. So Damion, welcome to the program today.
Hey, Jamie, thanks for having me, man.
So you're definitely a serial entrepreneur, and you also take care of yourself too, with fitness. So kudos to you for that. They interview a lot of, accomplished professionals, but they forget that health side of things. So congratulations on those 3 black belts. Quite an accomplishment.
I appreciate that, man. It's the first wealth. I mean, health truly is the first wealth.
Yeah, I need to listen to that a little bit more myself. So we're going to be talking today about Total Control Financial, which is, your business here in wealth management. And so you talk about the green and red arrows of wealth and poverty. So explain that for our audience.
Well, the green and red arrows of wealth really came up with a client conversation I had a couple years ago. And she said, I'm really struggling because every day I see the news and there's this financial report and I see this arrow when they say the Dow did this, and green arrows mean everything is good, I'm richer. And then I'm worried that I'm going to see a red arrow tomorrow. And when that happens, I feel poorer and I feel like I have no control. I have no ability to do anything with my wealth, because it's all tied into a system. It's like being on a roller coaster. And I said, cool, that sucks, but what do you want to do about it? And she said, I want to get off the roller coaster. And I said, all right, let's do that. So over a period of about 6 months, we worked on that process of moving her away from the typical traditional mutual fund type of things into the alternative space. And the next time the market crashed, I asked her how she did the day before. And she said, what do you mean? I said, the market crashed. And she said, you know what? I don't even care. And I went, that's exactly what you wanted, and you got it done.
Now, you said the alternative space. Let's talk about what the alternative space is. What is this?
The alternative space is all about assets that you can actually control, that you can influence, that you can impact. And so we're talking about things like real estate. We're talking about precious metals. We're talking about small businesses, things where you can get your arms around them and you can pretty much touch them, and you're not being feed in the darkness and the shadows. So it's really a different mindset, but it requires something that we hold really dear, which is the self-responsibility, because you're in charge and you can't just abdicate responsibility like we typically do with mutual funds. You really have to own that it's your deal, and it's up to you to make it happen.
Now, when people begin to work with you on wealth management, do you take them down a traditional and an alternative path, or is your product completely alternative?
It's completely alternative, and that really means that people have a choice how much they want to put all of their money in the alternatives, or they want to start moving some of it over. We don't actually manage money. What we do is we give the tool, if you will. We basically hand people a car, and then we're in the driver's passenger seat. We're kind of a navigator, and they're choosing where this thing goes. And so we give them the tool, and then we start giving them the navigation, the co-piloting. So they're in charge. We're not feeing them for the traditional asset under management model, where we just say, hey, don't worry about it. We got everything covered, and we'll charge you regardless of whether we do well or not. We're there to educate people along the way. So we're always with them, but we're not feeding them to death like the traditional model.
Okay, so you're not a textbook financial advisor that many people are familiar with. You mentioned the tool available at the website Total Control Financial, but explain this tool a little bit more. Is this something that is hands off, or is this something that they use in conjunction with consulting with yourself? Explain the tool a little bit more.
Yeah, the tool is really a solo 401k, and what that means, it's people are familiar with a 401k or an IRA, and those are traditionally something that is managed by a firm in New York or the Edward Jones or the Schwabs. And what we're doing is we're giving people the tool that ends up being a checkbook where they have the ability to invest with their money that's in that checkbook, in that account, and they write checks for things that make sense to them, whether it's the real estate or private equity. They can be the bank. They can loan money out. They can buy precious metals. And really, it comes down to them having checkbook control of their money and nobody telling them what they can and can't do and charging them for every one of those conversations.
Now, I see that you had a precious metals firm, and I see that being advertised more and more on television today. I know gold shot up in value, has been falling. I hear a lot about silver these days. Let's talk about that market in terms of an alternative investing. How is the precious metals market? Where should people put their money in metals?
Well, the precious metals market is a real market. It's a real asset. It's something you can put your hands on, and it cannot be manipulated. And that's something that people really need to get. They need to hear this, that so many things can be manipulated, whether it's stocks, bonds, mutual funds. All these things can be printed out of thin air, kind of like our currency. Every currency on the planet now can just be printed out of thin air as much as somebody wants to. So there's no way to really contain or maintain your wealth unless you're able to manage it. You can't manage money if somebody's printing it. And with silver and gold, just having it in your hands. And I'm not talking about paper where people buy an ETF or they buy an exchange or they buy some type of gold fund. Those things are garbage. And the reason they're garbage is because there's no way to really tell whether the gold that you're being sold is gold that really exists or it's just smoke and mirrors. You want to buy gold and silver that's in your hands, and it's really a hedge. It's a hedge for all the printing of currency that's out there. So every single person on the planet should have some, and it's a great way to get started. Even if you buy 1 ounce of silver, there's something that's kind of magical when you start holding wealth in your hands.
What market is doing better? I know gold shot up in value, and I think it's been retreating over the last few years. Correct me if I'm wrong. Is gold still a safe investment? Is silver still a safe investment? Which way is those trends going in terms of value?
Yeah, the problem with silver and also the great thing about it is it's used as an industrial metal and for high tech. So it's actually consumed as well as used for as money with silver coins. With gold, you've got all the central banks of the world actually collecting it. China's stocking it up and hoarding it. So is Russia and India. And so the gold market tends to be a lot more stable and it's not as volatile. Whereas silver, as the economy booms, there's more of it consumed. It's in every cell phone, it's in solar panels. So you're going to see more up and down. I still think silver is way undervalued. And traditionally, if you look at the ratios between gold and silver, silver is way out of whack right now. And that just means to me that we're probably going to see silver at some point shooting past $100 an ounce, which to me is kind of an opportunity. I still wouldn't have all my money in it. I would have a chunk of money in it. And I would also have some gold because these central banks are hoarding like crazy.
Gold and silver investments. Take a look at it. If you need some help, visit Total Control Financial for some more information. Now, Damion, a lot of people were damaged during the financial crisis in 2008. It's hard to convince some of the younger generation that investing in real estate is the key to wealth. How do you convince people today that you should still be putting money in real estate?
Man, I can tell you from personal experience that I went through this process. I lost a $20 million portfolio.
Wow.
And so there, my experience of going from 0 to 20 million to negative 5 million is a unique perspective. So I'm saying this based on having blown my knees up. And my suggestion is when you think long term, you realize there's this opportunity. And to me, that opportunity is 80 million millennials that are mostly wanting to find a place to rent. And if you can help solve that problem, it doesn't really make any difference whether the market collapses, and there will be a correction, a major one in the next 18 months. It has to be because of the rates going up. It doesn't make any difference if you're long-term playing with cash flow based on rentals, because people are going to continue to rent, even if when the markets go down. It's when you're speculating, and that's what people get into trouble with. They're going and they're buying and they're hoping, they're smoking a bunch of hopium, thinking this is the plan, I'm going to make some money here, and I have no idea how, but it's just the market's awesome. That's a terrible plan, because you have no control over that, and you may as well throw your money in the stock market. So really thinking about long-term how you're going to serve people and create value, that's where you can make a play, and it doesn't really make any difference what the market does.
I myself am a realtor here in Tampa Bay over the last 10 years. Our market over the last couple of years has beginning to be dominated by the rentals. Rents are at all-time high. Values, they're coming up. They were at record lows a couple of years ago. But you're right, there's a lot of demand for rents, but it's leveling off. And inventory's low, and there's a lot of real estate that's tied up in rental housing in the Tampa Bay market. And I talk about it as an opportunity to be aware of here in Tampa Bay, because a lot of these investors are buying to rent. But we're going to start to see more and more inventory come onto the marketplace as these investors, these hedge funds, which bought up tens of thousands of properties in our market and other markets, begin to release that inventory. What's your outlook more maybe on a national scale?
I think national. I look at these big trends, and I'm a big fan of Harry Dent and the demographic study that he does, where he's thinking about and looking at the baby boomers. I'm looking at the next generation. I'm really focusing on the millennials because of their buying power. It's going to be the biggest buying block in history. And when we're talking about these blocks of houses that Blackstone, BlackRock, all these different hedge funds and things went out and bought, and then they're releasing, we're talking about houses. And what millennials tend to not want is a house in the suburbs. They want to be connected to experiences, and there's just not that much that's been created. So there's this epic opportunity for small spaces for serving that group. And this is national. Everywhere, I mean, millennials are everywhere. They're in Omaha and Sheboygan and Tampa. They're all over the place. And so if we can figure out how to serve them and create these environments, we're talking mailbox money cash flow until you're dead.
Yeah,
and it's really figuring that out.
There's an article today in the Tampa Bay Business Journal about a developer who has just put out plans to build these very tiny apartments, like 400 or 500 square foot, which is very tiny by Tampa standards, in the downtown Tampa community. But there's people that are excited about that. So less is more in the coming days in real estate.
Smart developer right there. That is going to be a huge trend. It's not the McMansions that we saw in the 2000s that everybody seemed to want to have, and those things they're going to be vacant. They're going to be stuck. You're going to have a lot, and even the traditional houses, that's just not what this generation wants. And if you really dig into that generation, my friend Jason Dorsey here in Austin, the guy that really studies Gen Y, is all about that. If we study that and we figure out how to serve those people, we're gonna create fortunes.
You're right. And suburbanization, the move from the core to the outer areas, is inefficient, and it's also centered around racism. As you know, white people moved out to the outer areas, and the minorities were in the inner city. Millennials think totally different, and so we're going to see a return to urbanization because they're much more accepting of cultures, and they're much more into efficiencies, which makes sense, versus being 30 miles, and having to run pipes way out in the middle of nowhere. So good discussion. Got to take a break here talking to Damion Lupo, CEO of Total Control Financial, about alternative investments and building wealth, and learn more at that website, totalcontrolfinancial.com. You're listening to That Business Show 2.0. I am your host, Jamie Meloni, where business becomes show business.
Our primary business is hardwood flooring, although we are remodelers for kitchen, bath, and general construction. We operate a fleet of shop-at-home vans that have all the flooring type products: hardwood flooring, laminate flooring, tiles, stone, what have you. So we're able to come out first with products in our vehicles and take a look at the setting, how the colors will work, and then to be able to come up with some options and ideas for you. If that's not good enough, we have a large distribution center that we inventory product and have a nice display area.
Hi, Jackie Skelton from JR World Travel here. If you travel, you need a licensed professional travel consultant, not a computer. Your licensed professional consultant can get you more for your time and your money. Value for your money and experience, not marketing salesmanship. When you're sick, you call the doctor. When you need legal advice, you call an attorney. So the next time you want to go on any type of travel, call your licensed professional travel consultant who actually represents you. We specialise in group travel, family reunions, weddings, to escorting large groups or making special arrangements for the disabled. Please call 844-249-0190. We are a full-service travel consultancy offering worldwide concierge service. Air, land, sea, rivers, resorts, locally, nationally and internationally. Remember that number, 844-249-0190.
Welcome back to That Business Show 2.0. I'm your host, Jamie Meloni, where business becomes show business. My guest today, Damion Lupo, CEO of Total Control Financial. We're talking about alternative investments and how to build wealth in this new millennial-dominated marketplace. And so, Damion, let's talk about the idea of retirement. I know you really seem to hate that term, retirement.
I hate it, man. It's one of those things, every time I hear it, and I just cringe. And I start asking people, what are you talking about, retirement? They go, that's when I can start to live. And I go, why are you buying into this thing? And the reason I hate it is because this thing came up 100 years ago. It was this idea that when things were worn out, we're talking factory equipment, we're talking horses that were a part of the farm. I mean, if something was worn out, you took the thing out in the field and you shot it. I mean, this was like the end, that you retired the horse.
Right.
But people became part of this whole manufacturing infrastructure, and when they got older, they couldn't really perform, and so we started retiring them, and people bought into this, that was actually a good idea. And it's really crazy to me if you think about it. When somebody's 55, 60, 65 years old, they have decades of wisdom and all of this ability to contribute, and all of a sudden they decide, I'm going to stop working and I'm going to just go out there and play. And so the idea is, if you're thinking about that, you've got two problems. One, you just wasted the last 30, 40 years not actually living and participating in your life. And the other problem is, when you say I'm done, the universe is going to be done with you. The universe is going to basically say, okay, well, if you stop contributing, if you're not doing anything, you're taking up space. And there's a really crazy statistic that the average American male dies 3 years after he retires. Wow. So why would we set ourselves up for that? It's the stupidest thing ever. It's about creating a life today and then continuing to expand and continue to contribute, versus saying I'm done and checking out and going into your coffin. I mean, that's stupid.
What do you think the retirement years will look like for the millennials? Do you see them working and contributing more and more and not being dependent on Social Security?
Yeah, Jamie, this is a totally different generation where they're thinking about experiences, and they're experiencing things today. They're traveling more, they're connecting more. They're not, and they're working all sorts of different jobs. There's no 40-year job. None of that is real with the millennials. They're moving around a lot more. So I don't see them following a traditional model at all. And I see when they're 50, 60, they're going to be on their 50th country that they've explored. They're going to be in their 27th job or their 50th company that they've built. I mean, this generation is doing things totally different. The idea of retirement, they don't buy into Social Security. They don't buy into pensions. They don't buy into any of these ideas. So ultimately, they're going to be doing things different, and they're going to be living the whole way through and throwing retirement right out the window.
Yeah, things like marriage and home ownership, those are all changing in this evolving economy that's going to be dominated more and more by the millennials, replacing the baby boomers, America's greatest generation to date. But millennials are nipping at their heels right now. So what's this EQRP thing, and how do you empower moms with it and give them peace of mind and security?
Well, the EQRP is the Empowered Qualified Retirement Plan, and really what this is the solo 401k that we've built, and what we're doing is we're blending technology into it so that you can start doing these alternative investing ideas, whether it's with the real estate or precious metals or things, from your phone. And what that means for moms, it means that they have the ability to make choices to do investing without just abdicating or really turning responsibility over. I know when I was a kid, I watched my parents, and my mom really didn't have a clue what was going on, and my dad kept her in the dark. And what we're doing is we're empowering these women to be able to make choices at age 20 or age 50, doesn't really matter. It's the ability for them to choose and become confident, because truly financial freedom is not a pile of money in the bank. It's the confidence to go out there and know that you've got the ability to create something. And I know that seeing my mom becoming confident with her ability to create financial wealth is the coolest thing that I could ever imagine contributing to this planet, is seeing people with that confidence so that they don't feel scared and stuck.
Now we're seeing the Dow at record highs, over 20,000. Donald Trump touting, his presidency is the reason for that. But, it makes me nervous. I mean, we can't keep seeing everything go up, and up. Should we be cautious of, investments, in traditional markets?
Yeah, I think we should be terrified of investments in traditional markets. Reason being, this market is it's artificial. And the reason is we've got all these companies that are buying shares back, and it's really benefiting one group. And that's the folks at the top, the C-level group that has options where they can cash out. It's not benefiting the shareholders, really. It's just pushing these prices up. And ultimately, when that stops happening, when the loose money stops, when the rates go up, things stall out, and the people that get burned are the ones that are just holding and praying and, again, smoking all this hopium. I mean, everybody's basically stoned out of their mind with this artificialness that's happening, and people should be terrified. They should be really thinking about retracting and pulling out and putting money on the sidelines, so that when there's the opportunity during the correction, they have dry powder. You don't want to be sitting there chasing this thing down. You want to be on the sidelines waiting for it. This bull is tired, man. I mean, this bull has been running for like 7 years.
So you recommend that people just keep their money right now into a basic, checking account or a CD right now, keep it on the side, something safe, and then, wait for this next correction, and maybe real estate or maybe, precious metals, as we talked about earlier, maybe a good place to put their money. Is most of your, money sitting on the sideline right now?
Yeah, it's on the sideline, and it's in really safe real estate activities like hard money lending, where it doesn't matter to me if the market's actually dropped 10, 20, 30%. I'm not going to be exposed. I have zero exposure in the equity markets. And so I really recommend people think about that. Instead of being jealous or envious that all these hedge funds made a fortune during the crash, you can say, hey, that's going to be me in the next crash. I'm going to be the one out there picking things up for 50 cents on the dollar, and that's where I'm going to create my wealth. That's where wealth gets created. It's during these downtimes, and people need to be not bloodied in the downtime. Otherwise, you won't really get involved because you're too scared and you're too timid.
And do you think the time-tested trait that real estate is the key to wealth will continue through generations, or do you think other investment strategies will replace that, moniker that real estate is the key to wealth?
I don't think real estate's going anywhere. And if I was betting, I would bet on real estate forever.
Well, good information right there. And you mentioned the term hard money, and that's another alternative investment that I see a lot of people taking advantage of. And you say it has no risk, but explain how hard money lending, and you hear lending, well, that's got risk. Explain how you're able to hedge your bet when you lend to people in that market.
Well, so there's this shadow banking world that's happening because the banks are becoming more and more regulated, and they can only do certain things, and they really have to be they can't do, if somebody goes and wants to buy a house and create a rental and it has no tenant and it's beat up, they can't get a loan from a bank. So that's where I step in and I'll loan the money for them to go do that. And so maybe they find a house that's $50,000 and it's really worth 130, but it's all messed up. I'm going to loan my money out. I'm going to loan it to the person because I believe in them, and I'm going to loan it to the property because I believe in that property. And it doesn't matter to me if the property falls apart, the economy falls apart, because I'm still not going to lose, because there's enough margin there. If the house is worth 130, 140,000, I know that I'm not going to lose. It's different than a bank. They'll lend 100% of the value of the house, and if the market goes down 10 or 15%, they're hammered. I never do that type of thing. I also have the flexibility to invest with people based on them, and not just based on whether or not they have enough income that supports their stupidity to buy something that they shouldn't. I invest in people that are doing smart deals, and so there's a lot less risk involved.
What's the next step for someone who wants to take control of their financial retirement?
First thing to do is get educated, get empowered. I wrote a few books on these things, with the Total Control Guide to the QRP and the Quick and Dirty Guide to Gold and Silver. And it's your job to empower yourself and take responsibility. Pick up those books and educate yourself. I mean, when you're educated, nobody can take that away. You can't learn less. You can get beat up in the markets, but the education and the empowerment in your mind never goes away. That's the first place to start.
Now, you also founded a martial arts, Yokido. Am I saying that right, first of all? Yokido?
Yeah.
And is that a business too, or is that just your own self-taught discipline that you keep to yourself?
That's my soul. I mean, so really, it's funny because to me, when I share that, there's so much excitement. So many people reach out and they say, I want more. And I go, I don't even know what that looks like, because it's so much fun for me. It's sort of becoming a business that I don't really understand yet, because It's just something I love so much. And that's one of the things that happens when you really dive into something and you share it with the world. It's amazing that people start going, I want more of that. And that's really what's happening. So it's forming up. I've been teaching it for a number of years, and it's out there. I mean, people can find out about it at yokido.org. But that's we'll see where that goes. That's a lot of fun though.
So you're the holder of 3 other black belts. So is Yokido derived from the other influences that you were taught?
It is. It's a blend of Aikido, so that my other black belts are in Aikido, different forms of it, and yoga. And there's really a synergy between the two. And it was just my version of this. Whenever you do something for 20 years, oftentimes you sort of become a different version of whatever that thing is you're studying. And so my love and passion for yoga and what it represents and Aikido has really formed and merged into Yokido. It's like the universe pushed it through me. I didn't really have a choice, and then here we are.
Very cool. And you're also the author of several books on financial management. Availability of your books and pieces for people.
All the books are on Amazon. You can just go there, look up Damion Lupo, and you're going to be able to find all of them. And whatever jumps out at you is the one that you should be reading, because I've given everything that I know and have learned, and everything that I've been pained enough to experience, so that it's part of me. It's all in these books, and that's my way of giving back to people, so that they don't have to go through the pain and trauma that I've gone through learning these things.
All right, good discussion. Our closing thought here, you're talking about leaving your money on the sideline, a big correction. Are we going to see another severe recession, or will we ever see another depression in your opinion? I mean, but what's on the horizon in the next 5 years for our markets?
Yeah, without a doubt, the thing that, and this is math, and it's really fascinating. We know that the Federal Reserve is going to be pushing rates up a point over the next year and a half. When that goes up, you're talking about a 25% increase in rates with mortgage rates. That will force the real estate market to drop by about 18 to 20%. It's straight math. It's why the market went up so much when we had the rates dropping, and it's an inverse relationship. What that means is that there is going to be a correction, and it's going to be an opportunity. So if you're speculating and you're not doing things based on fundamentals, you're going to get hurt. The idea is make sure you focus on things that are sustainable through that process, and understand that there's going to be an opportunity to buy things on sale all over the country pretty soon.
Good discussion. Damion Lupo, CEO of Total Control Financial. Thank you so much for being with me today.
Thanks, Jamie. Appreciate it.
And learn more about him, totalcontrolfinancial.com, where he gives you a tool to build your wealth. Again, totalcontrolfinancial.com, not your typical financial advisor. Does not work in that space. Again, talks about alternative investments and ways to build wealth. So good interview today on That Business Show 2.0. And we'd love to hear your story too, and about your business. And if you'd like to come on the show, please visit tbsinterview.com. You've been listening to That Business Show 2.0. I am your host, Jamie Meloni, where business becomes show business.